Welcome to BizTech's C-Suite Conversation Show. Today, our guest is Aashish Sharma. He's the Senior Director of Decision Management Solutions at Fico Asia Pacific. Now, Fico is a leading analytics software company helping businesses in 90-plus countries make better decisions that drive higher levels of growth, productivity, and customer satisfaction. Now, to tell us more, Aashish, welcome to the show.
Thank you, Ryan, and thanks for your audience.
Now, Fico is a very well-known name in the US, but please give us an overview of Fico as a company and its history.
So Fico, as you said, Fico is very well known in the US and also in parts of Asia, primarily with people working in the banking industry, telecom industry, insurance, and so forth. So Fico is primarily an analytics company, and through our analytics, through our tools, and now our platform, we help businesses make better decisions for their end consumers, which are more personalized or overall better. Ultimately, through these better decisions, we are helping these businesses to either grow their business further, make it more profitable, or ultimately deliver more personalized and better experiences to their end consumers.
Okay, Aashish, help us to break it down. Tell us about how your products are used by your customers and what sort of outcomes can they derive in terms of savings and profitability increases.
So if you look at this, Fico plays, again, if I focus on, let's say, financial industry, banking in particular, there are various tools and analytics tools and decisioning tools that we offer. For example, we play in the area of fraud. How do you ensure that the credit card that you're using and when you're swiping it at any particular POS is not a fraudulent transaction, right? So in that sense, Fico's technology, which is working behind the scene, is monitoring every transaction that you make as a consumer and ensuring that you are protected from fraud. Similarly, for someone who's applying for a new loan, be it a mortgage or a credit card or a personal loan, how do banks assess in terms of a creditworthiness, in terms of how much should a loan be granted under what terms? So there is a lot of analytics and decisioning that goes behind the scene to ensure that there's a best decision made. So Fico tools analytics helps in making those decisions better.
Okay, the pandemic changed expectations of consumers because suddenly everything had to be done remotely. Banks upped their game. And tell us a little bit more than, because Fico obviously has a regional footprint, some of the changes that you've seen in the last 2 years.
So let me take a step back and share with you some of the survey results from the RFI Global that we have. First of all, and this was a survey done for the APAC region, and it has impacted directionally almost same across the region, but in terms of quantum, it is slightly different. For example, Australia, New Zealand, the consumers, the respondents who said that their income has been negatively impacted is roughly in the range of 25 to 30. As you move towards Singapore, we have Singapore and India, roughly 40% of the retail consumers saying that their income has been negatively impacted. Now, Malaysia around 50%. But when we look at Indonesia and Thailand, the number of respondents who have experienced negative income is around 63 and 70%. So in that sense, a lot of consumers have been impacted in terms of the income that they have. Now, what does that mean? And does that mean that their behavior around managing money has changed? And what we also find in the survey is following, that the consumers are now, they want the money to work hard for them, right? So they are they're saying that they will save more, they will invest more, they will spend less. And given the economy is growing up, they're also looking to borrow more. So these are all cues. These are all cues for the banks to sort of pick up and tailor their services and products around these results.
And how has that impacted also in terms of the risk modeling by banks? Because one of the things that's happened, especially in some markets where perhaps direct injections into consumers were not as great. Say, for markets like Malaysia, for example, the government did not inject a lot of direct funds into consumers' hands. In Australia, for example, they did. There was 2 stimulus packages of 100 billion each, and literally there were schemes like JobKeeper and Job Seeker, which then obviously resulted in the fact that the consumers had little or no impact in terms of incomes. Whereas, as you pointed out in the survey, in many markets like Indonesia and Thailand, there was an impact. How did that impact banks' risk modeling?
So clearly, these are shocks, right? These are extreme, conditions under which models, while directionally they may still say that the quantum of impact for someone who's scoring high would be lower than someone who's scoring lower anyway, would have a higher impact. Now, models should have still handled that directional impact regardless. But again, given how different governments have reacted and helped the consumers or their citizens sail over this, banks will have to go back and look at the model validation. Now, in FICO, we are actually doing that, where we are being asked by various banks to help them see whether the models need to be revalidated and so on. Now, that's part one. Part two, which is more interesting. You see, a lot of consumers, and because of this pandemic, what has helped is it has served as a catalyst to digital adoption, both from organizations, be it the delivery, food delivery, or education delivery, or also from a bank point of view, right? And also the consumers. Both sides have adopted the digital in a much faster way than would have anticipated. Now, that has led to a lot of digital data being generated, alternate data, digital data, which then is leading banks, organizations to say whether we can tap into this data and do more than what we would have otherwise done. And I guess that's where a lot of interesting things are happening in the area of not only credit risk, but again, our interest is primarily on that area, but that's where a lot of focus is going to be, and we see that happening.
Okay, could you drill down on that? Because that's a very interesting perspective. Your models are changing as consumer spending is changing. Tell us some of the insights that you've got from various markets on this.
So, not to say that our models are changing because consumer, behaviors are changing, but obviously there is more data now available. Now, in FICO, we have been using what we call as transaction data or use of transaction data. Now, again, sorry, just to deviate a bit. One other thing which we see in the survey is a lot of consumers are moving or looking to switch to different providers. And what is interesting is, and again, looking at how the consumers' emphasis on saving, a lot of savings accounts are being opened. What that means is, and in the digital world, a lot of transaction is happening through this savings account, debit account, right? And as the transactions are happening, the consumers are telling you more about how they consume, where they, what their incomes are, what their expenses are. And this is what in FICO we refer to as transaction analytics. So to answer your question, what we see in terms of changing in modeling, I think this use of transactions data, transaction analytics, is what FICO is helping a lot of clients, especially in the ANZ region, and that is adding to a lot of value in terms of affordability, to identify while the customer may be good from a credit risk point of view, but can they afford this extra loan? And that's where the use of most granular level of data, which is transaction analytics, and use of the transaction analytics to identify affordability and finally use it for credit assessment. That's, I think, where we see changes.
So Aashish, one of the key changes in the last 2 years, and you talk about transaction data and also affordability, is buy now, pay later. Now, how has that impacted the whole banking landscape? Because essentially, buy now, pay later in a lot of markets slips under the radar in terms of reporting.
That is true. So absolutely right. In terms of the growth of BNPL or buy now, pay later has been tremendous. And it seems that it will continue to grow. Regulators are conscious of it, and I think recently one of the central banks in India came out with some inputs on how to ensure that there is proper use of fintech. Now, while the growth of BNPL continues, I think there are certain learnings for the bank here. First of all, right now BNPL is used more as a mode of acquiring customers, right? Because it's zero interest rate, and you're expected to pay within 3 or 6 equal installments, and if you are able to do that, then of course you can get higher lines. So I see a lot of it as a consumer acquisition strategy, and especially for those consumers for which either there is no credit or new to credit as it is called, or for those who do not have a credit experience. And by giving them BNPL, monitoring them over a period of month, then you can give them a much other credit products. So it's almost what in the past used to be called as low and grow, right? You give a credit card limit which is low, and then you grow. Number one. Number two, I also think a large part of BNPL is about convenience, right? So one is the consumer segment. The second is convenience. A lot of these consumers who are on a shopping website or like Amazon, Lazada, or Shopee, when they are buying, we are seeing the order size of the basket increasing, because now they can buy multiple products and hope to pay in installments. So to answer your question, as a bank, obviously it is important to continue to monitor it. But the learning, I would say, is to continue to focus on your existing consumer base, because there is no reason for your existing consumer base they should go to a third-party BNPL, whereas you should be able to identify them, offer them even before they want what are the different BNPL or pay later through credit card limits or through direct debit products, and give them that convenient journey that they are seeking to look elsewhere.
So it's interesting that you just said that, because if I remember reading in your survey also alludes to the fact that the possibility of an increase in customers' intentions to switch banking providers. I think you just mentioned that as well. Is this a factor in terms of retention for banks to really then offer this proactively in order to retain customers?
Absolutely. In fact, I would say you shouldn't even stop at BNPL, right? And this is where the personalization aspect of customer-centric decisioning comes into play. Ultimately, and in fact, I was talking to someone who, chief risk officer of a bank in the region, who were looking to launch digital bank, and interestingly, their focus was on new to credit consumers. Now, this is the thing. See, when you have enough data on your consumers, you should be able to segment that entire population into different buckets, different segments, and then to one of that segment you may offer BNPL. To others, something else may be the right product. And this is where learning from your customer and giving a more personalized offer is what I think is the answer. To come back to the example that I was talking to, so their focus was to go after new to credit consumer on their existing savings portfolio. Now, typically, if you look at an unsecured loan, and I'm telling you the mindset shift, right, of this senior chief risk officer who's looking to launch digital bank. So while they know that in typical unsecured approval rates may be in the range of 50 to 70% for credit card, this is a new to credit for which there is probably no potential knowledge of credit worthiness. So even at the start, they knew that there are a couple of things that they need to address for this program to be successful. One, that whole journey has to be very smooth, digital, right? So it should be as simple as ordering, let's say, something on Shopee or Lazada or Amazon. Number one. Number two, they brought down their expectations of approval rate. The approval rate should be no more than 8 to 10%, which is a drastic drop down. If you look at the typical unsecured approval rates of 50 to 70%, 8 to 10%. So where I'm going with this is, as the bankers look at delivering these new products, whether it's BNPL, whether it is same old products, but more digital savvy, they have to think of customer centricity, think of segments, and then offer personalized products for each of these different segments. Ultimately, they should be targeting segment of one.
So the key thing is with the incumbent banks, the big threat is really the new neobanks or fully digital banking providers that are springing up across the region. Do you see them taking significant market share in any specific markets?
Well, I think it is probably anyone's guess, but what is clear is that they are definitely serving as a catalyst, right? Again, we have two different or three different categories where one is a purely digital bank or someone who's a traditional bank who's launching a digital sort of segue. Regardless, I think to answer your question, whether traditional banks will be impacted, I think they are already realizing that these fintechs or digital banks or new banks are delivering better services. In fact, if I look back at the survey, a large portion, I think almost 31% of consumers almost 30% of consumers are looking or have taken products in the last 12 months, which are not from their own service provider or their main primary service provider. Now, clearly, the reason for that could be multiple. Either and I think again, those are clear in our surveys, but primarily where they're saying is the switch is happening because the digital journey provided by their primary bank is not as convenient or as simple as they see elsewhere. And the biggest challenge, and if I look back at the survey again, most of the highest number of products that these consumers, whether it is retail consumer or mass affluent, the number one product that they have opened in the alternate provider, whether it's a fintech or a different traditional bank which is offering digital services, doesn't matter, is, and no surprise, savings account, because the focus, if you remember earlier, on the savings and investment.
Yeah.
So they're opening savings account in these alternate banks because it is simpler and easier and probably better rates. But what is more interesting, Brian, is the survey suggests that if they move, and this is known from our experience and what we have seen others do as well, if a consumer moves their savings account into another bank and they like what they see there, they are more likely to bring all their products and services to that bank. And I think that is the risk. So in summary, if I may, while the traditional banks today have an advantage of a large consumer base, which is their biggest strength, but if they do not focus on customer centricity, learning what their consumers want and break it down into different segments to deliver personalized services which are simpler and convenient, then there is a risk for them, for the consumer, because consumer ultimately has choice and they will move if they find better service.
And also, Aashish, on the other side of the equation, when you talk about risks, these new incumbents as well, because they use service providers and partners like Fico, probably have better access to risk information than some of the incumbents. Is that a fair comment?
I wouldn't put it that way. See, because for us also, a lot of banks, in large banks, let's say, I don't want to use the term traditional anymore, because ultimately I think the future will hold an ecosystem, right? Ecosystem where different banks and different providers, service providers will come together to deliver better services. Now, it is true though, a lot of these big banks and new banks, digital banks, they are coming and taking advantage of Fico's learnings, Fico's platform, because ultimately it is not just about buying a product, right? It's about partnership and delivering and using Fico's own analytics and experience to deliver these services in a very quick time, learn from it, and then continue to focus on the customer centricity and delivering personalized services. So yes, some of these neo banks or digital banks have partnered with us, and they have been able to deliver good services to their consumers very, very quickly. And we see more of this happening.
Now, Aashish, it's been a fascinating conversation, but before we leave, any final thoughts you'd like to leave us with?
I think in the end, I will say that consumers will have choice, and they will continue to demand a better, personalized, simple, and convenient journeys for themselves. And they will also demand a basket of product and services for the bank that they want to bank with. Now, I think it is on the bank to continue to see whether every touch point that the consumer has with the bank, it will leave digital footprints, right? Digital data. So the bank must be able to harness this data, convert this data into insights about knowing more about the consumer, what they want, what they like, what is the next product, personalize it, and then using these insights, deliver the right action. The action could be a cross-sell offer, or of a product A, or a different service, regardless. And once that action has been taken, to monitor that outcome, right? Because you may not get it right at the first time. So that ability for you to continuously monitor the outcome of actions that you have taken based on the data is very important. And finally, all of this should be able to be delivered in a platform, like a FICO platform, which allows you to start with one use case and to expand it into other use cases, because that is very critical, right? You shouldn't.
Yes.
We are no more looking at a big 12 months or 18 months project. We are looking at delivering services, learn from it, build fast, deliver fast, right? Those kind. And this is where the platform, adopting a platform will help in our view.
Aashish, thank you very much for taking your time to be on the show.
Thank you, Brian. It's a pleasure.
Now, I'm Brian Fernandez, and we've been speaking to Aashish Sharma, the Senior Director of Decision Management Solutions at FICO Asia Pacific, on BizTech's C-Suite Conversation Show. This video and podcast will be on our social media platforms as well as our website, www.biztech.asia. Please like and subscribe to our various platforms. Thanks again for tuning in.